to the second edition of First Mover during Consensus Day 4, your midday global look at today's action in the Bitcoin, blockchain, and digital asset space. I'm your host, Christine Lee, and joining me are my co-host, CoinDesk Managing Editor of Global Capital Markets, Lawrence Lute, and Emily will be joining us later on. Good morning, Lawrence. Always a pleasure.
Indeed, always a pleasure on my end as well.
Yeah. All right. We're going to dive into some consensus news, but let's first check in on Bitcoin. The CoinDesk Bitcoin price XBX index is currently trading at $39,916. Bitcoin is slightly up about 2.4% over the past 24 hours. And the CoinDesk Ether price, ETX index right now at 2812. ETH is trading pretty flat, slightly up over the past 24 hours. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as a leader in crypto news, events, and data. All right, Lawrence, so taking a look at the markets, not much going on. It's trading kind of sideways. What are your thoughts?
A little bit up, but you know why? Tom Brady.
Tom Brady. That's coming up.
It's a Tom Brady rally. That's what we're seeing.
It's the laser eye Tom Brady rally.
Exactly.
With my man, SBF. Sam Bankman-Fried.
Yeah, okay, great. 29-year-old billionaire. But did he win seven Super Bowls?
When you're in the billionaires club, they're just all friends.
Yeah. And if Tom isn't the billionaire, it doesn't matter. He's got 7 rings.
True enough. I'm also looking forward to Hayden Adams from Uniswap. He's coming up later. Fred Ursum, who's also the co-founder of Coinbase. That's going to be good talk. And of course, we're going to round up the conference with Tom Brady and Sam Bankman-Fried from FTX. Very much looking forward to that. All right. Well, keeping financial transactions private and the role of privacy coins is becoming a hot topic as governments look into regulating crypto and creating central bank digital currencies. Joining us now is Josh Swihart, Senior Vice President of Growth at the Electric Coin Company, to talk about privacy coin Zcash. Welcome to the show, Josh.
Thanks for having me.
All right, so we actually, during Consensus, have been talking to the acting director of FinCEN, Michael Mosier. I would love to have you listen to one of these clips. He's talking about closing the gap on integrity between anti-money laundering and consumer protection concerns.
If you imagine, if we're able to sort of reduce the rug pulls and the pump and dump pieces, but you look at this sort of liquidity and yield, instead of going to your bank and getting 0.4%, imagine, we've been engaging with tribal communities and sort of their access to financial systems and their challenges with AML and all that. But if you imagine them, instead of like 0.4%, that they're able to use a yielding, a vault, that they're going to get 25%, or put it into sort of perpetuals, and they're going to just throw off enough yield to pay their bills and the infrastructure, and then do so much more. I think it's that ability to sort of close this gap on the financial integrity piece, which might be AML or just might be stability and consumer protection, where instead of your parents getting a reverse mortgage, they're putting their money in a vault that's allowing them to throw off enough yield to live on. And it's like everybody can participate in this, not just the people that can afford to lose it.
So Josh, would love to get your reaction on that clip and perhaps comment on the role that privacy coins can play in this context.
Well, I mean, first of all, I think there's a problem maybe with the definition of privacy coin, because privacy isn't a binary thing. It depends on how you're using the technology, the cryptocurrency. And so it really just depends on those kind of factors: wallets, network level privacy, metadata, counterparty risk, and so on. And actually, I think the word privacy is kind of overloaded with the idea of nefarious activity, right? So why do I need to stay private if I'm not doing anything wrong? But the reality is that privacy is really about dignity, and it's about consent. It's me as a person choosing what to share or not to share. And privacy and dignity. So actually, I think we ought to call them dignity coins rather than privacy coins. But that can coexist with existing KYC AML within U.S. regulatory.
So how would that
jurisdiction.
work? Cash is private. Nobody knows about your cash payment to the street stall vendor on the street, as it should be. So how would it interact with AML, KYC in that context?
Well, today people buy and sell cryptocurrencies on regulated exchanges. So, for example, Gemini is a regulated exchange under NYDFS, fully supports Zcash privacy. So you can withdraw Zcash to a private address, but they KYC their customers, and they comply with regulation. They use things like customer due diligence, enhanced due diligence, in order to be able to do that effectively. And that's the same way that cash is treated with banks, right? So if you choose to withdraw over $10,000 from a bank, that may get flagged, and they may ask you, what you intend to do with the money. Exchanges can comply in the same way.
Okay. Just want to welcome Emily to the show. Emily Parker, she's our Managing Director of International Policy and Content. Welcome, Emily. But
Thank you.
just good to have you. All right. But just to back to the conversation, we also spoke to the acting director of FinCEN about this unhosted wallet rule that came up at the end of the Trump administration. It seemed that, especially with Treasury Secretary Steven Mnuchin, he had it really in on this new proposed rule that would require banks to track the transactions of people from banks to unhosted wallets or private wallets. Would love to hear your comments on that and how privacy could play a role in that.
I'm sorry, as it relates to unhosted wallets. So, I think access is extremely important, and I believe that he talked about that a little bit in his session as well, right? So we're entering this new space that is supposed to free the world and give people access to financial products that they haven't ever had access to before. And so the risk that we have is that we're trying to overload this new technology with or apply existing kind of regulations to new technology and create something that ultimately will be brittle. So I know that there's conversations broadly within Treasury. There's conversations with FATF about unhosted wallets and DeFi, and how do we kind of deal with the question of identity. But we've also got to deal with the fact that there's billions of people around the world that don't have access to identity. And so are they going to have access to this new financial system, or are we going to continue to exclude them?
Hi, Josh. Good morning. Just a larger question about sort of the consumer need for privacy in general. So, one thing I've noticed that with some of these privacy coins or dignity coins or whatever you call them is that some of them offer privacy features that users don't actually take advantage of or don't actually use, right? And so this is one of these interesting things where people say they want privacy, but then don't actually always take advantage of the privacy features that are offered to them. Is this something that you've observed, and is this changing?
I think it's changing as privacy gets more usable. So if there's too much friction, and you might say okay, there's so much friction to using privacy that it's just, who cares if I buy a cup of coffee? But if it's embedded within the technology and we have the ability to use it without that friction, then I think people will use it and people will opt in.
Josh, you recently did a study you worked on that found criminals still prefer Bitcoin over privacy coins. Can you tell us a bit more about that research?
Yeah, we actually commissioned that research at the request of a regulator in a foreign jurisdiction, because the question was, or the perception was, that if a coin provides confidentiality within transactions, then it must be used for nefarious purposes by money launderers, terrorist financiers, people that are dealing in all kinds of bad things. And we were asserting that wasn't true, and the kind of information that we had indicated that wasn't true, that predominantly it's the US dollar that's being used, but within crypto exchange, or within the crypto world, that largely it was still Bitcoin. And so they requested that we commission an independent third party to study that. And so we did that. We hired the RAND Corporation. The RAND Corporation did a comprehensive study, and came out with kind of indications that, while Zcash is widely used, it's not used for nefarious purposes. It's still other cryptocurrencies that are predominantly used within dark markets, for example.
So, Josh, why is that? I mean, of course, you could say, great, that people aren't using it for money laundering or terrorism or whatever. But what is it about Zcash that makes them not want to use it? Is it the lack of liquidity or a lack of customers willing to take it? Or is there some feature in Zcash that makes people who are using it for illicit purposes not want to touch it? And if so, who is using Zcash, and what do we know about its users?
Yeah, that's a great question. I think the Rand Corporation gave some indications as to why they believe that Zcash isn't being used in dark markets or for money laundering. Number one, I think liquidity, as you mentioned, is kind of a concern or an issue, and so that's a reason people are using Bitcoin. There's others in that they've indicated that perhaps our stance towards engaging with regulators is a turnoff to people that want to use it for illegal purposes. So that might also be a significant factor. Now, Zcash is used around the world, and it's used for remittances and safety. I'm aware of people that are using it to get money to, like one person to get money to parents who are in a country where they aren't friendly to missionaries, and so they use it to transfer money to them. I'm aware of a Syrian refugee who all of his assets were seized when he protested his government, and he was forced to leave the country, and he uses it to protect his assets. And then a lot of us in the community, I use it to buy coffee. There's a coffee shop here in Boulder, Colorado that allows you to use Zcash to buy your coffee.
All right, Josh, thanks for joining us this morning. I hope that as governments get into crypto, that we continue on this discussion on privacy. But thanks for joining us.
Awesome. Thank you for having me.
All right, that was Electric Coin Company Senior Vice President of Growth, Josh Swihart. And joining us now as our next guest is Dan Held, Head of Growth at Kraken, to discuss the markets and if an IPO is in its future. Welcome, Dan.
Thanks for having me, y'all.
Good to have you. All right, so Kraken said in March that it was considering a stock market debut via a direct listing or IPO in 2022. Is this still on the table given that the current crypto markets aren't looking so great?
I would push back and say that the crypto markets are looking great right now. I mean, if you look at Kraken volume alongside other exchange volume, we hit all-time highs a few weeks ago. Kraken had an $8 billion volume day. That's an incredible amount of money traded. And I think there's a report put out that it was over 93 billion traded across all the exchanges on that peak volume date a few weeks ago. Exchanges make money on volatility, not necessarily price going up or down. It makes money on the directionality of the price going up or down. So I think that Kraken's in a great spot still. A lot of the other exchanges are in a great spot as well.
Yeah, but fair enough. To our IPO, you're seeing, go ahead. You're mentioning the IPO.
Yeah, sorry. I wanted to add a note with the IPO. This is a little bit above my pay grade. However, everything seems to still be on track for a direct listing sometime in 2022, but I don't have any idea of what timing that might be at.
Right. You were talking about the trading activity, fair enough, but amid that volume, we do have a lot of users who are saying that Kraken keeps going down. For example, last week Kraken went down due to some technical issues as the crypto market saw prices drop. Do you have an idea of what's happening there and what's being done to resolve these issues?
Absolutely. Uptime is our number one priority at Kraken. The amount of hiring that we're doing is insane. So the infrastructure questions that we're having right now, can our infrastructure handle 100x, 10x, 100x, 1000x sort of velocity of new folks logging in and trying to trade? We're thinking about that constantly. So infrastructure is number one concern at Kraken. With any exchange, I think all the exchanges suffer from this really intense period where in a bull run, you've got a lot of people signing up, you've got a lot of people trading, and traditional infrastructure is really hard to work with that and make that work for the crypto markets.
Hi, Dan. You've been in this world for a while. So I just want to ask you kind of a bigger picture question about, now that Bitcoin has sort of hit the prime time and there's all this mainstream interest and all this institutional interest. How do you think about the current narrative of Bitcoin, like how the mainstream media is covering Bitcoin and cryptocurrency in general? Do you think they're mostly getting it right, or still some major things that they're getting wrong?
Yeah, I'm not sure if it's like a binary, yes, they're getting it right, or no, they're getting it wrong. I think it's probably like a gradient of more correct versus less correct. And I've been in since the crypto space. I've been in since 2012 and built my first products in 2013 in the crypto space. So I think in terms of a gradient of is Bitcoin being represented accurately in the press? Is the narrative of Bitcoin resonating with its core value prop? I don't think we've ever been in a better spot than now. Bitcoin's core value prop as a goal 2.0 or store of value is resonating with the institutional audience, the largest stakeholders in the room for Bitcoin to be recognized as a new asset class. So I think Bitcoin's narrative has never been stronger in that regard.
So speaking of narratives, one of the interesting trends we're seeing in the crypto world, and Kraken is no exception, are exchanges getting into the content business, right? Like pushing out content. And then there was this report by Axios that Coinbase is also going to launch a media arm. Do you think this is good for the industry, for exchanges to be in the content business? Because exchanges obviously have a vested interest in certain outcomes and certain tokens. And what is your take on this, the impact on the industry as a whole?
I think it's a fascinating new direction for different companies to create larger content arms. These exchanges, brokerages, different participants in the crypto ecosystem, they already have a content business in a way. Content marketing is a core piece of any business. So content marketing can include social media, blogs, et cetera. So I think that what we're seeing with Coinbase, I believe you're referencing Coinbase's acquisition or Coinbase's ambition to go build out kind of their own media arm. I think that this is a kind of bigger, bolder marketing move. I think that in the crypto space, it's so competitive that each company is trying to look for their own edge. And I definitely see this being a trend long term as more and more companies want to increase the surface area of their content, which increases the number of users that they acquire.
Morning, Dan. So Tether it's a stable coin that you guys make a market in. Now Coinbase has joined in as well, and they recently released their assets. Their documents, and it doesn't seem that they have as much cash as they have commercial paper on their books. So is that a risk to the market? Is it a risk to Kraken and its customers? And if so, what kind of things are you doing to hedge that risk?
Great question. So I think when we look at Tether, a lot of people like to quote this number of like, oh, when Tether provided its reserves, we didn't see a lot of cash on the balance sheet. Well, the point is not to hold cash because cash is losing value. And so they need to preserve that value, that to maintain that stablecoin value, they need to at least beat inflation, right? And so they typically put that cash into short-term interest.
I'm sorry to interrupt, but why would they have to beat inflation if it's supposed to be one for one? Other than they might have some small costs involved in managing it, but generally they're not in the business of beating inflation. They're not necessarily paying an interest rate on holding that stable coin, or they're not paying their holders, the people who have the stable coin. They're not paying them interest. So why would they need to beat inflation? Why not have cash and instead of going to commercial paper, which might not necessarily stay valued at 1-to-1 for their purchase price?
Yeah, so I mean, commercial paper is typically regarded as cash equivalent. So a lot of people like to say that they didn't have cash, but they do have a cash equivalent. In terms of beating inflation, I mean, they do have costs in terms of running Tether. When we look at the stablecoin model,
we don't know the ratings of the commercial paper that they own.
Right. I haven't done like a complete audit, or I haven't dived through the paperwork, so I can't comment on exactly.
They haven't done an audit either, unfortunately.
Yeah, so I can't comment exactly how they structured their process or structured their sort of their spectrum of their portfolio. But what I do know is that companies typically don't hold large amounts of cash. I know that this is a stable coin, but to the best of my understanding, like for example, if we look at Libra, like Facebook stable coin, they weren't going to hold that all in fiat cash either. They were going to have that in short-term financial instruments. So that seems to be a standard of how stablecoins would be created.
Short-term financial instruments can include treasuries, which have a better credit rating than that of commercial paper. So, I mean, that is a risk, and you guys are making a market, and you do accept Tether for Bitcoin. How are you offsetting that risk? In what way do you guys look at it and say, you know what, there is a potential credit issue involved? That if those assets don't in fact match 1-for-1, the peg won't hold.
Yeah, I mean, we're in the business of listing different crypto assets. I mean, we've got hundreds of different crypto assets that we list. We go through an audit process of when we add each of those new assets. So we evaluate them on different parameters. I'm not part of the coin listing team, so I don't look at that myself personally. With these crypto assets, each one has its own unique risks, right? Bitcoin is not without risk either. Bitcoin is a very low level of risk, at least that would be my subjective opinion of it. But certainly any of these stable coins, any type of new DeFi token or Bitcoin, a classic crypto asset, each one has its own unique type of risks. And I think that's up to our customers to define themselves.
Dan, switching topics, I was wondering about your response to the news that Carl Icahn, a billionaire who previously said crypto was ridiculous, has changed his tune on crypto and could be investing more than $1 billion now into crypto.
I mean, Carl Icahn is a classic, a traditional macro, like big, huge hedge fund guy that a lot of people look up to. He's a legend. So him coming into crypto, I think, is huge. That's definitely another big check mark for that the institutions are here. So I think that again with Ray Dalio, I think Ray Dalio was at Consensus when he announced that news. I think that these are huge milestones, huge check marks for the idea that institutions have arrived.
And is Kraken talking to many of these types of investors to get onboarded and to buy crypto?
Yeah, I can't comment who we're talking to, but we certainly have a lot of institutional interest at Kraken. Both retail and institutional interest have been huge over the last couple months. So definitely really exciting to see these traditional folks come in.
All right. Dan, thanks so much for joining us this morning. Appreciate your insights.
Thanks for having me.
All right, that was the head of growth at Kraken, Dan Held. After the break, we'll take a trip to the metaverse and get a tour of Consensus Digital Art Gallery by gallery producer and artist Godfrey Meyer, also known as Boombox Head. Welcome back. BitPay seeing an uptick in retailers offering Doge as a payment option. One of their most famous partnerships is with the Oakland A's. Joining us now is BitPay CEO Stephen Pear. Welcome, Stephen.
Thanks for having me.
Good to have you. All right, so the Oakland A's, they're announcing that they are going to start accepting Doge for ticket sales. Can you tell us a little bit of what you know about how much traction they've actually received on Doge payments? Are people actually buying tickets to the baseball games with Doge?
I wouldn't be surprised. I'm sure they are. We have actually seen, since we launched Doge back in March, we processed over 13,000 transactions in Doge, which blew us away. We never expected that.
And yeah, what are people using Doge to buy? Just normal, everyday retail payments?
It is. It's everything that, all the different merchants that we have on our platform, they're all seeing, some Doge payments. So, like I said, it was back in March, Mark Cuban came to us and asked us, he would like to accept Doge for the Dallas Mavericks. And, we said, why not? Sometimes you have to do things just because they're fun, not necessarily because they make any sense. But I tell you, we launched it, and again, we were blown away. It's climbed into the number 3 spot in terms of, things blockchains use for payments.
It's such a cool concept because, one of the questions we get often is like, why, is cryptocurrency actually used for payment? But I guess the question is why would somebody use Doge for payment other than like the cool factor? Like, is there actually like a practical reason why you would use this rather than just like, I don't know, a credit card or cash? I mean, because it's like going to be a little bit more of a hurdle compared to just traditional payments.
It's not a hurdle if you have Doge. So you've made an investment in Doge. You've seen that investment go up, and you want to buy things with it. So our platform makes it just easy for people to use cryptocurrency for payments, and whether that's Bitcoin or Doge or anything else, it's a lot easier to just buy what you want than have to sell it on an exchange, withdraw that to a bank account, and use a traditional, method of payment.
Welcome on. The question I have, you said that number 3 was Doge. I assume numbers 1 and 2 are Bitcoin and ETH. What about 4, 5,
Actually,
and 6?
No.
Oh, really? Okay.
Yeah. So number 1 is Bitcoin. Yeah, number 1 is Bitcoin. Number 2 is Bitcoin Cash. Number 3 is Doge. ETH is number 4, but very close, right behind Doge. And these are stats of the most recent month, right? So it's
what percentage-wise?
We'll see if Doge maintains that.
Percentage-wise,
12%.
12%, and then Bitcoin Cash that's behind. Is that significantly larger than Doge, or?
It's around 17%, I believe, if I'm not mistaken. Don't quote me on that number. That's from memory. Bitcoin is about 50% of our payments, and then the rest of the coins follow from there.
So that's like close to like.
So and that's by number. By volume, it's a bit different. Bitcoin is about 70% by volume. So people are making higher value purchases with Bitcoin.
Yeah, it's interesting that 75% are from those 3, and that doesn't include Ethereum. So that's of note. ETH is why do you suppose that is? Bitcoin Cash has that? Go on.
So ETH is number 2 by volume, but number 4 by transaction count. Yeah.
Right.
And so I think with both Bitcoin and Ethereum, those transactions are more expensive than other chains. And so you'll see, people tend to reserve those purchases with those coins for higher ticket items. They're not buying cups of coffee with Bitcoin. I think that explains the difference. But I think, when we launched Doge, XRP is in the mix. Yes, it is. And it was, I want to say, number 3 for a while, but we had to turn that off when Ripple, had their issues with the SEC, and we restored service in Europe for XRP.
And do you have like the percentage dollar? In other words, the average dollar price tag for transactions in Bitcoin Cash? How are people? Is it cups of coffee and
Or is it all higher value transactions?
Our average transaction is about $1,200 or $1,300. I would say that Doge and Bitcoin Cash are going to be more in the $400 to $500 range. A lower average order size.
And how many Mavs tickets have been sold in Doge, by the way?
I don't know. I don't keep track of the stats to that level of detail.
And as the crypto markets have increased in volume, trading activity, and value, I wonder, have the transactions on BitPay been increasing or decreasing with that value?
The transactions on BitPay have been, when the prices go up, people tend to want to buy things. And so our volumes have grown accordingly this year.
Right. Stephen, interesting to understand how people are using crypto for payments. I appreciate you coming onto the show.
Thanks for having me.
Right, that was BitPay CEO Stephen Pear. And our next guest worked with the Consensus 2021 team and some of the top crypto artists in the world to produce an interactive digital art gallery called Long the Metaverse. Godfrey Meyer, also known as Boombox Head, first takes us on a tour. Let's take a look.
Hi, I'm Boomboxhead, and this is Virtual Reality. I want to take you guys into one of my galleries that I made for CoinDesk Consensus 2021 featuring art from Josie. Check this out. Crazy to me how you can make NFTs and bring them into virtual reality and hold them in your digital hands. Inside VR, we can make virtual reality galleries. And this is my art gallery I'm walking you through right now. Inside here, it's full of NFTs, and I invite you guys to come check it out sometime.
Pretty cool. Please join me in welcoming artist Godfrey Boomboxhead Meyer. Hello there, Godfrey. Or do you prefer Boomboxhead? Maybe Boomy, I don't know.
Yeah, it's all good. Boomboxhead, Godfrey, same thing. Thank you guys so much for having me today. This is great. Hope you guys are doing well.
All right, so Boomboxhead, maybe you can start off with explaining, for the uninitiated, what the metaverse exactly is.
Yeah, so the metaverse is kind of basically the reality but digitized. So everything that we do in reality, we've brought into the internet, and inside video game engines, we've created one-to-one things of reality. So we use virtual reality for studios, podcasting, just like you see me. I'm inside VR right now at my house, and we've created characters, we shoot music videos, we do filmmaking, and of course art galleries. And the blockchain and this technology has really, come together like mac and cheese, let's say. They really go together good.
Can you break down for us exactly what this sort of the intersection of VR and NFTs, like why, how do they intersect? Why do you need NFTs for VR? Why do you need VR for NFTs? Just if you could break that down for the mainstream audience, I think that'd be useful.
Yeah, so inside VR, we can actually see our NFTs, and since NFTs are digital in nature, when you get them inside VR, they have more utility. Like they might be a key to a door, or they might be, you might just hang them on your wall in your virtual house, or actually, we don't really know like the full extent of what's going to happen with NFTs in VR, but in VR, they actually can be realized, held, and that's a whole new way of experiencing these digital art pieces. If we're talking NFTs for art, of course.
Yeah, well, you kind of have two challenges here because, both VR and NFTs are incredibly confusing to the average person, right? I mean, both of them have sort of yet to reach that level of mainstream acceptance. They're still kind of, both appealing to a sort of niche audience. And then when you combine them together, I guess it would get even more niche. I mean, is that a challenge?
It really is. I mean, building these things, really, it's all the different formats of all the NFTs. Sometimes they're video files, sometimes they're GIF files, sometimes they're text, or there's about, 100 different types of NFTs. So in the metaverse, the challenge is, formatting these in a way that everybody can experience them. Is it going to be on a phone? Is it going to be on a headset? And since the technology is a little bit hard to get into, the last 2 years, it's been slow to be adopted. But I think, as technology becomes cheaper, headsets become more affordable, and things like that, we're going to see a lot more people using these technologies.
So, Mr. Head, how do you pick the artists for the galleries at Consensus? I noticed you use Josie. She's very popular with Metacoven, the buyer of Beeple's $69 million piece. What about the artist that you pick is different than in the physical world? Is there, besides the obvious that these things have some sort of can have functionality or whatever, is there anything aesthetically that's different? Is unique in the virtual world that is just physical world just kind of wouldn't necessarily translate it. It wouldn't translate into the physical world. Besides the obvious that it's digital, is there something about the nature of it that's different?
Yeah, thank you. Yeah, that was, there's a lot of interesting ways to approach putting these galleries together. And I was fortunate enough to early on, a couple of years ago, get into the scene and met a lot of these artists. And as far as building the galleries and choosing the artists, I had some help with curators on this particular one. Thank you, Anissa and DC. They helped curate this gallery. But some of the things that I did the production on the gallery and created it, built it, and did all the virtual production that you're seeing, kind of like this for the talks. And then what's different about it is basically these pieces, when you walk around them, for instance, Coldy has a piece inside our gallery that you can walk around, and it's a new version of his pieces where he's taken layers of them and put them in 3D space. So now that you can actually walk around the pieces and interact them in a different way. And in the future, I plan on using this technology to make more interactive pieces, kind of like you'd see in a physical gallery where you'd walk by a piece and it interacts with you. But in virtual reality, we could do things like no gravity. We could break the laws of physics. We could use async network connections to change layers. The artwork can actually change and interact. There's so much more that we could do since it's a software-based gallery. And in the future, we're basically hiring developers and working with people to extend and make everything interoperable. So if you go see one gallery on Decentraland and you see it, and you see that experience, and you go to somewhere else and you see it somewhere else like Mozilla Hubs, we're trying to connect all these in ways that create these really rich experiences. So it's yet to be seen, but with the tools like Lights, Camera, and Action, we can create magic with these tools.
So, Boomy, do you think that there will be this shift or great movement towards digital art and away from physical art, or even, zooming out bigger, a digital world and away from a physical world? What would that experience be like?
That's the most exciting thing. I wouldn't say that physical art will ever really go away, because I really believe that all digital art, if you look down into the, the silicon atoms or whatever we're going to talk about, that's all at some form or another matter. So let's just say art is art, and physical, digital, it's all art. But yes, I think this digital layer that's coming is going to be really something that catches us all by surprise, because we'll have our own layers of augmented reality and geotagged holograms all around the whole Earth, right? So the whole Earth will have layers of creative layers, NFT layers, utility layers, firefighter layer, police layer, all these different layers for people to basically interact with. So what we're going to see is all these different people fighting to get the first actual net of the Earth, which Google's been trying to do, as you know. But whoever gets this first net, we're all going to be building off of that in layers and layers and layers, and we're going to see VR go to AR, and a blend between our daily physical day-to-day and then using these technologies to enhance our lives. I don't think we should be afraid of it and AI and all that. I think we're going to...
So are we going to end up, spending more times in our little rooms with the sets and not really walking outside anymore because we're spending so much time in these virtual realities? Yeah,
maybe. It really depends. I really think that there's now a lot of focus on, the environment and people's health and how much the computers are impacting our lives. So I think there's a lot of smart people working on ways to get us out of this tethered thing and into the world, and then be able to use these tools more like just wearing glasses. We really need some Oakleys with some stylistic button that just gets us into VR, out of VR, with some really fast connections and bandwidth to do that.
All right. Well, Boomy, love what you're creating. Thanks for coming on to the show, and looking forward to seeing more of the gallery. All right, that was Long, the Metaverse producer, Godfrey Boombox Head Meyer. Still to come after the break, Elliptic co-founder and chief scientist Dr. Tom Robinson, and Crypto.com CEO Chris Marszalek. Welcome back. A group of hackers that shut down the Colonial Pipeline brought in more than $90 million in Bitcoin ransoms. This according to research from blockchain analytics company Elliptic. Joining us now to talk through the findings is Dr. Tom Robinson, Elliptic co-founder and chief scientist. Welcome, Dr. Robinson.
Morning. Thank you for having me.
All right, so Elliptic claims that you guys were the first to identify the Bitcoin wallet used to receive a 75 BTC ransom payment from Colonial Pipeline, but you haven't released that information publicly yet. So whereas some of others have, is this because you're working with a specific government or government agency? What can you tell us about that?
No, the reason we haven't made it completely public is that this is information that our customers pay for to have access to through our tools. And there are some sensitivities around our analysis, and so no, we haven't made it public to date.
So one of the interesting things about what you're doing is that, it's proving that it's relatively easy to trace crime via blockchain technology. So I'm just curious, how do you respond to this very widespread conception that, cryptocurrency is sort of this ideal tool for money laundering and for crime? I mean, do you think that people are really getting that wrong?
Absolutely, yes. I think people need to get it into perspective. Yes, certain types of cybercriminal are using cryptocurrency, but it's a tiny proportion of all cryptocurrency transactions, far less than 1% of all Bitcoin transactions, for example, by our measure. And Bitcoin is probably the most used by illicit actors. I think for other crypto assets, the proportion of is actually even less than that.
Doctor, then perhaps you could react to a recent Wall Street Journal column calling for a ban on cryptocurrency to fight ransomware. It was by Lee Reiners, who works at Duke Law. What was your reaction to that?
Well, as I think we know that you can't really ban a decentralized cryptocurrency. So I don't think it's a reasonable solution to this issue. I mean, so our analysis of the dark side ransomware, for example, enabled us to trace where the ransom payments were being sent after they'd been received by DarkSide. So where were they being laundered? Were they being cashed out? And it is still primarily being sent to exchanges. And so we have these exit points where regulation can be applied to make it far more difficult for ransomware operators to cash out and benefit from their crime. Already, exchanges in most countries in the world are regulated and will be checking whether incoming transactions are coming from ransomware wallets or other illicit sources. But there are still some countries where that isn't in force. And so I think the low-hanging fruit here is to make sure that cryptocurrency exchanges around the world are subject to uniform regulation, anti-money laundering, countering the financing of terrorism. That's what we should be doing to ensure that ransomware doesn't pay for those who are responsible.
Dr. Robinson, according to your analytics, you said it was going primarily to exchanges. Where else did the money go? And then as far as those exchanges go, have any of them frozen it?
So we're not privy to that information about how the exchanges are reacting. I think what was interesting were some of the other destinations, though. So, for example, we saw a decent proportion of the ransom funds sent to dark marketplaces, in particular Hydra, a Russian language darknet marketplace. And what we think is going on here is that cash out services that are available on Hydra are being used. So you can provide a vendor with some Bitcoin, and they will provide you with physical cash in return. That will generally be hidden in a location somewhere in Russia, and you're given the coordinates to go and find it. We also saw some of these ransomware funds being sent to privacy wallets, such as Wasabi Wallet and Join Market, presumably to make it more difficult to follow the transaction trail.
So which exchanges ended up getting the most of that?
So we're not going to name and shame any exchanges. What I can say, though, is it was typically exchanges in jurisdictions where regulation of crypto exchanges is less mature.
You've reported that hackers were working as ransomware as a service. Perhaps you can tell us, what is this exactly?
Yeah, so in the ransomware as a service business model, you have the ransomware developers who code the malware, and then you have the affiliates who actually infect the target organization with that malware. And so it allows the different types of cybercriminal to specialize in their particular forte. So the developers and the people who are skilled at infiltrating the targets. And then the ransom payment is split between the developer and the affiliate once that's paid. So in the case of DarkSide, around 20% of the ransom payments went to the developer and around 80% went to the various affiliates. And you can see that splitting of the ransomware payments very clearly on the blockchain. And so what that enables you to do is, for example, link together different attacks to the same affiliate. So, for example, the Colonial Pipeline's payment and the payment by a company called Brenntag actually went to the same affiliate wallet. And so that means you can assume that both of those attacks were made by the same affiliate.
So I'm curious about some of the ethical questions that come into play here, because I imagine you get inquiries from law enforcement and also from private customers, and some of them might not have the best intentions, right? I mean, some of it's to track crime, which, could be seen as a positive thing, but some of it probably is for surveillance. How do you draw the line about like which customers you service?
Yeah, so we do perform due diligence on our customers, and we have had inquiries from certain governments in certain countries where we have refused to supply them with our products and services.
Dr. Robinson, thank you for joining us. Really interesting to learn more about these ransomware attacks and how it affects illicit activity.
Thank you for having me.
All right, that was Dr. Tom Robinson, co-founder and chief scientist at Elliptic. Meanwhile, climate change has been one of the hottest topics in the crypto community lately. Today, Crypto.com's CEO, Chris Marszalek, joins us to talk about how the exchange plans to reduce its carbon footprint. Welcome there, Chris.
Thanks for having me.
So maybe you could start off by telling us a bit about your announcement and the decision-making process that went into it.
Right. So we're committing to turn carbon emission negative in the next 18 months. And we actually start this process by looking at our own footprint. As you know, we are a large-scale cryptocurrency platform, so we do process a lot of transactions on proof-of-work chains like Bitcoin and Ethereum. So our first stage is to just look at it, and subsequently we're going to buy carbon credits to offset this and take us into carbon negative territory. The second area which we're focusing on is actually releasing products that improve the situation. In March, our crypto.org chain went live in mainnet stage. This is a proof of stake chain, so massively more efficient from the point of view of emissions comparing to proof of work chains. And just this quarter, we are releasing emission-free NFTs on our chain, as well as enabling EVM type of sidechain, which will allow projects to migrate from proof of work Ethereum to crypto.org chain very easily. So we think this is all helping create like a cleaner environment.
Chris, have you had these goals in mind for a while, or has, since Elon tweeting about it, really set the industry going to look at ESG more clearly and more, in the spotlight?
Yeah, I think this is a kind of a watershed moment for the whole industry, and it creates a lot of focus. And I think it was much needed. It was never a priority for major industry players, and now it certainly is. Everybody understands that the narrative could have shifted in a way that is not great for the entire industry. But cryptocurrency space in general has so many people who deeply care about environment, and climate change is the most pressing issue of our time. So I think this is a fantastic development that focuses the entire industry on coming together and solving these problems in multiple ways. Besides, just offsetting our own carbon footprint, releasing a chain that solves this problem. We're also looking at, I just from an investment point of view, if there are projects that are at the intersection of blockchain, crypto, and climate change, we're keen to fund these projects too. So everybody should put their best foot forward to address this.
Well, just to get a little bit more granular here. So, a lot of the press has been about Bitcoin and Bitcoin's energy consumption, but Elon Musk has kind of implied that Dogecoin is sort of a better option. Is Dogecoin or Dogecoin mining less harmful than Bitcoin?
Yeah, the way I think about it at a very high level is that, even if you take the most pessimistic assumptions about Bitcoin and you compare this to the global emissions, it's like what 0.17% of just assuming everything comes from like dirty coal, electricity, right? Versus 99.8% that is caused by plenty of other issues. So I think we need to keep a little bit of perspective here, and there's plenty of chains that do not have these type of emission issues as Bitcoin. But as an industry, we just need to take the first step to take care of this 0.17% and then take it even further and see how we can address the globally in a way that is meaningful and will have meaningful effect on this 99.8% emissions. So we try to take a more high-level view of this issue.
While the goal of a cleaner environment is, of course, laudable, do you think that Elon Musk at least created this sort of FUD to get miners to purchase his, carbon credits or solar panels? Is there perhaps a financial incentive on his part to have started this discussion at least, and to create this sort of focus when he happens to be in the business of selling things that would offset it?
I don't think Elon is a person who is driven by profit or money, but he cares deeply about the environment, and you can see that just the fact that he moved the entire automaking industry towards electric cars is just great for humanity. So he wants impact, and he's in a position of where he can have a lot of impact. Obviously, we don't like this the way it impacts the short-term market performance, all this stuff. But you can't deny the fact that it focused the entire industry on looking at this issue and finding a solution to it. So I don't think this was money driven. This is about impact.
Yeah, you'll be buying credits as well, correct?
Absolutely. And again, the industry is flush with capital. There are plenty of highly profitable businesses. This is not difficult to do all the leaders in this market have to go out there and say it. I mean, we're going to be carbon neutral. We're going to be carbon negative. Just clean up our own backyard and then use this all this talent that is in this industry to push it forward, push the conversation forward.
How much of a hit, or how much of your revenues or bottom line would take a hit by purchasing? I mean, do you know what kind of investment you'd have to make to purchase offsets?
We are still looking at this, and there's the easy calculations that you can do based on your on-chain transactions, right? Because you can tie it pretty directly. But we want to look at it in a more comprehensive manner, like our entire business. How does this? What kind of carbon footprint it generates? My estimate, a ballpark figure, would be probably $5 to $10 million if you want to turn substantially carbon negative.
Is that per year or just total?
Per year.
Investment per year.
Per year.
So, Chris, you don't think that Elon had, these comments were profit motivated?
Absolutely not. I mean, he's already the richest guy in the world. Who cares?
He got there somehow.
Fair enough. All right, all valid comments. Thank you, Chris, for joining us this morning. Appreciate hearing about your new announcement, and good luck with the carbon offsets and keeping yourself carbon neutral.
Thanks a lot for having me. Much appreciated.
All right, that was Crypto.com CEO Chris Marszalek. And that's it for First Mover. Thank you, Emily Parker, our CoinDesk Managing Director of International Content, and Lawrence Lewiton, Managing Editor of Global Capital Markets. I'm your host, Christine Lee. Coming up at 3 p.m., Isaiah Jackson brings you a special consensus edition of Community Crypto. Special guests include actor Hill Harper and Naja Roberts, who co-created the Black Wall Street app. And everyone is looking forward to the final keynotes of Consensus 2021. Tonight, Binance's CZ, ARK Investments' Cathie Wood, Tom Brady, of course, and Sam Bankman-Fried will all take the stage. And after that, the team on the Hash will be with you at 9 p.m. to wrap up Consensus 2021. You're watching CoinDesk TV.